Namaste. Myself CA.Pramod Jain, and this is again a short video on the cases where income tax return is not filed. In case of delayed filing, we know that from the assessment year 18-19, there is a fee which has to be paid along with the filing of return. If the return is filed delayed and it is filed before December, then it is 5,000 rupees. And if it is filed after December, it is 10,000 rupees. Or if my total income is below rupees 5 lakhs, then the fee that is to be payable to the government is 1,000 rupees. But what happens if a person says that I'm not filing a return? What has happened? The maximum fee is rupees say 5,000 or 10,000. Let us see, there is a provision under the income tax which is called section 276CC. So, what does it say? It says that there is a prosecution, imprisonment, jail if a person fails to furnish the ITR under sections. There are 4 sections mentioned. Section 139 subsection 1, that is return to be filed within due date. Section 142(1)(1), where the return is to be filed upon a notice is received, or section 148 in the case of reassessment, where the notice is issued by the department for reassessing under section 147, or in search cases under section 153A, where the block return 6-year assessment is to be made. Then the notice is given and the return is to be filed. And there is a prosecution if either of these 4 cases the return is not filed. So, what is the prosecution? Prosecution would be the issue is, can the mere non-filing of ITR lead to prosecution? Basically, obviously everyone would say mere non-filing of the return should not lead, but there is a provision which we are discussing right now, where the amount of tax which would have been evaded if failure had not been discovered exceeds rupees 25 lakhs. In that case, there is a rigorous imprisonment for a term which is minimum 6 months and maximum 7 years. So, where the amount involved of the tax evaded is 25 lakhs, then the imprisonment, rigorous imprisonment, not normal imprisonment, rigorous imprisonment, minimum 6 months, maximum 7 years. In all other cases, that is where the amount of tax evaded is not 25 lakhs but below that, then of course along with that the fine would be there. Then in any other case, imprisonment for a term, minimum 3 months, maximum 2 years, and fine. So, if the amount involved of tax evaded is 25 lakhs, the rigorous imprisonment. In the case other than 25 lakhs, below that, then there is a simple imprisonment for a term, minimum 3 months, maximum 2 years, and fine. So, in all cases it is so? No, it is not so. The exceptions are given. What are those exceptions? The exceptions are, if the return is filed under section 139 subsection 1, that is within the due date it is to be filed. If it is filed before the expiry of the said assessment year, then there would be no prosecution. Now let us take the case of assessment year 18-19. The due date of filing for us, say, salary return is say 31st July. And if it is not filed by 31st July, but say if it is filed by 31st March, then this proviso, that this exception would be there and there would be no prosecution. But if it is not filed, then we'll see further, would the prosecution be avoided? If not, upon issue of the notice and prosecution be initiated and there is no reasonable cause, it depends upon case to case, but the provision is there, yes, prosecution can be launched. Where the tax payable on total income determined on regular assessment as reduced by my advance tax, if any paid, and TDS does not exceed rupees 3,000. That case also there would be no prosecution. Now suppose we will be discussing to certain cases. I have to file my return, my tax payable apart from my advance tax and TDS is not going beyond 3,000 rupees, then there would be no prosecution. But no exemption from prosecution in certain case, that is ITR where it is to be filed under section 142(1), 148 or 153A. Because this exception is only for section 139(1). If a notice is being issued under section 142(1) or 148 or 153A and you have not filed the ITR, then irrespective of these amounts, the prosecution could be launched. And in case of companies, because this amendment has been made with effect from assessment year 18-19, this 3,000 limit is not there. So in the case of companies, if the ITR is not filed with effect from assessment year 18-19, then the prosecution could be launched on the company, that is its directors. Now, let us take 2-3 examples to understand this. Very, very simple examples. Suppose Mr. A is a salaried employee and his total income is say rupees 6 lakhs and all TDS is deducted by the employer and there is no tax payable. ITR is again not filed in this case. Then is section 276CC applicable? The prosecution can be launched. In this case, the prosecution cannot be launched because by the mere reason that my tax payable is not exceeding rupees 3,000. It is below 3,000. So I am covered by that exception. But I am not saying that in such cases ITR should not be filed. It should be filed. If it is not filed, then there is that additional fee, that is to be paid. Under section 234F, 10,000 rupees in such case. Let us take another case. Mr. B is a salaried employee. Say again, total income rupees 9 lakhs. On salary income, TDS is deducted, but he is having certain FDR or bank interest. Suppose he has a saving bank interest of 30,000. He doesn't have any FDR or any other income. So on the saving bank interest, there is no TDS. So he can get a deduction under section 80 TTA for rupees 10,000. Remaining income which is left taxable is 20,000. So on 20,000, being in the 20% slab rate, his tax payable is 4,000 rupees, which exceeds rupees 3,000. So if the ITR is not filed, yes, the prosecution can be launched. This amount 3,000 was kept very so many years back, but it is still there. It has not been amended by the assessment in 18-19. So it is again still 3,000. Let us take another small example. There is a partnership firm, ABC partnership firm. It has no business, nil return, and it does not file the ITR. Is the prosecution applicable to 276CC? No, because on the partnership firm, again, the benefit of 3,000 rupees tax payable is there. But yes, the additional fee would be levied of rupees 10,000. Another case, there is a company XYZ Private Limited. It does not have any business income, and its income tax return is also not filed. So nil income. So they मेरे तो काम ही नहीं किया, जब काम ही नहीं किया तो return किस बात की? But if the return is not filed, section 276 in this case would be applicable because from assessment year 18-19, the company's the 3,000 limit has been taken up. So please take care. In these cases, filing of the return is very important to avoid the additional fee under section 234F. But apart from that, the prosecution could be launched. So to avoid that, I'll request everyone to file their income tax returns on time, because the government is again and again emphasizing more and more to comply. If you are having your taxable income, you are having a company, even if you are not having a business, every company and partnership firm, they are required to file their return mandatorily, even if there is no income. Now, would in all cases the prosecution could be launched? There is a provision which says that compounding can be applied for under section 279. So compounding, the additional fee would be payable, the additional amount of tax or the compounding fees to be payable. So for that, there is a circular which supersedes all other circulars, which is dated 23rd December 2014. For TDS late payment, the compounding fee is 3% per month of that amount which is paid delayed. In the case of this ITR, on the amount payable tax, the compounding fee is 2% per month. 2% per month. So please take care, file your returns well within time to avoid any confusion or any prosecution or any late fee, I would say, even on the late fee. Thank you very much for seeing this video. Thank you.